TV, online and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and you're watching Talk Your Book, and today we're very lucky to be joined by Anthony Kavanagh from Chester Asset Management. Anthony, first time on the show, and I know it's reporting season, so thanks very much for making the time.
Thanks for having me on, mate. It is a busy time, but always got time for you.
Now, before we get into your stock, maybe just give us a brief overview of Chester Asset Management and how you guys look to allocate capital.
Yeah, sure. So Chester Asset Management, we've been around since 2017, founded by Rob Tucker and myself. Luke Howard joined us a year later, so there was initially three of us. We've recently hired a fourth employee member, and we've got a fifth joining us a couple of months after that. So a five-man team now. So I guess the process with Chester, for want of a better terminology, is we're a GARP type of fund, growth at a reasonable price. Without going into the whole detail, we invest in kind of a pyramid format, which is a bit different to some others in the market, in that we allocate approximately 2/3 of our allocation to what we would define as predictables or industrial types of stocks, with a bit of a quality bend, but obviously with that GARP bias in mind. And then probably 25%, up to 25% of the portfolio invest in cyclicals. That could be, your standard commodities to energy to retail. And then up to 10% of the portfolio is in defence companies, which we define as cash and gold, stuff that's non-correlated to the market. So that's Chester in a nutshell, and we've grown quite nicely since 2017. So happy to still be kicking.
And what stock did you want to talk about today?
So today I've brought you Light & Wonder. It's a bit different to the normal type of stock. I should have described in the process that Chester, we're kind of usually going for unappreciated and underloved stocks, I should say. I would say that Light & Wonder doesn't necessarily fit that bill in the Australian market. Why we still think there's opportunity there though is it's almost a bit like the ResMed thesis, like I was describing to you earlier, in the fact that I think the Australian market thinks a bit differently to the US guys, particularly when it comes to gaming machines, and Aristocrat's probably one of the key reasons for that different thinking. If you go back to ResMed a few months ago when it was trading at $22, $23 a share, every person I spoke to in the Australian market was basically buying ResMed and owned ResMed. Now, I described it as, I guess, the most consensus contrarian trade around that I've ever seen. Doesn't mean it was the wrong trade though. So I would say that it's almost the Australian investor versus the US investor with Light & Wonder, in that most of the Australian market does seem bullish on the name. And we're positively predisposed to the name. We've been there since July last year, and they listed in May. So there is still a bit of a learning exercise going on in the Australian market. But yeah, it's one that we're extremely excited about.
And it's dual listing, so it's a CDI. For investors that haven't seen that before, is that material, or how does that structure differ from a traditional Aussie equity?
It is a bit different in the fact that the primary listing is in the US, so a lot of the flow happens in the US. And when it first came to the Australian market, there was very limited volume that was actually sitting here in Australia. So what you actually need to do is actually pull the stock from the US and convert it to that CDI listing in Australia, and you need your brokers to do that for you. But I think since they listed with limited volume, I think there's now almost 1.5 million worth of CDI on the Australian market, and so now it's trading like a normal stock, and it's recently entered the 200. So yeah, there's a lot of interest in the name and a lot of flow now.
And let's they've got three business units. Give us an overview of what the different units do, and maybe start with land-based gaming.
Yeah, sure. So just a bit of background. So if you go back to 2019, it's probably worth making the point that they were a company called Games, and at the time they had net debt of about 6.5 times. So, in any stretch of the imagination, even the US that are a bit more liberal around their balance sheets, that's an overstretched balance sheet. So at the time they had 5 different business units. So at that time they brought in advisors Jamie Odell and Tony Consaris, who was the ex-CFO and the ex-MD of Aristocrat, and they had to basically rationalise their business down to 3 business units. So those 3 that you find today, as you said, starts with land-based gaming. But the 2 that they divested were lotteries, and they divested an online sports betting business. So that basically gave them the ability to clean up their balance sheet and now be left with a core business unit of 3 businesses, the first of which, as you said, is land-based gaming. So land-based gaming is basically your poker machines is the first part of it. Now there's 2 different forms of, I guess, commercialisation models with those machines. There's outright sales, which the Australian market is a good example of a market that's completely outright sales based. and there's gaming operations. So that's basically you lease your machine to a casino in the fact that you put it on the floor and you collect a fee per day from that machine. So it's a capital light model for the casinos, but the more quality you have in your machines, the more your machine will be, I guess, destined towards that leasing model. And that's kind of something that Aristocrat put in place to basically extract as much longer term rent out of the machines as what you possibly can. Because you think about a commercialisation model, if you're selling one machine, you're getting your hit up front, but you're not getting the trail from what that machine can deliver. If you've got the machine out on the floor, you can continue to collect revenue from it, and it's a lot better revenue stream for the long-term sustainability of that business. So those are two of the key components of that land-based part of the business. There's also two other smaller parts that are worth talking about. There's a systems part of the business, which basically monitoring systems for all the different casinos. So it's, like some of the software and systems to basically monitor people on the gaming floor. And then there's a tables component, which is basically like every time you go into a casino, you see the tables. They are they've got 80% of the outright sales market of those tables and all the associated products like the chips and stuff associated with them. So that's your land-based part.
And the skill, I guess, from Light & Wonder's perspective is just how much fun the game is to play. That's their challenge.
Basically, yeah, it's creating the best math and making the game, I guess, the most addictive as it possibly can be.
And is R&D a big component of that?
Yeah, it is. So, and that's part of when I talked about the history of the business in 2019, when you got 6.5 times net debt to EBITDA, which actually got to 10 times during COVID, you don't really have any ability to invest in the business. And this is the same with almost any business. When you create the situation where your balance sheet is strong and you're starting to generate momentum with your revenue line, it gives you that ability to invest in R&D like a flywheel effect. So when Jamie and Tony came in and were advising Sci Games, one of the key things they said is like, once your balance sheet is cleaned up, you need to make sure you have that ongoing investment into your R&D of the business. And so they've set a target of about 10% in R&D.
10% of revenue.
10% of revenue, correct. So before that, there was limited investment going on. That 10% of revenue enables you to go out and hire the best guys in the market, which is what they've done. They hired a guy called Ted Haas and Giannis Sombonides from Aristocrat.
Flows off the tongue.
Flows off the tongue. Yeah, I shouldn't have even tried to say it, to be honest. And then they hired Emma Charles, who was basically 2IC for the Dragon Link game at Aristocrat, and they put him in their studios and gave him basically time to go and develop these machines. And having that ability to invest in R&D or D&D and the talent is then what creates the best games. And you give these guys time, they're like, for want of a better terminology, Bill Beeman would always say this about the mining contractors, it's your Messis and your Ronaldos of the gaming industry, right? These guys, they're the ones that get up and win the awards. They're the guys who are getting paid millions of dollars a year. They're the guys who've got the egos that want the best machines out on the floor, and they're driven to basically create these titles. So back in 2020, 21, when they started investing in those studios, that started to create, I guess, the ability to then create the best machines that can then increase their outright sales, which then flows into more revenue, which flows into more R&D, which flows into more investment, that flywheel effect.
And talk to us about the SciPlay business unit.
Yeah, so the SciPlay is their second business unit. So for want of a better description, it's probably you open up your phone and you go on Apple Play and you open up the App Store, they've got apps. So basically fake money gaming, titles that you might be familiar with. I don't play them myself personally, but Monopoly is one name. You basically generate a fee per day. So you monetize in-game, people download it for a limited fee. Sometimes you can pay for some of these, but then you can collect tokens and exchange them for all types of goods. But yeah, people actually pay money in-game to enhance the experience inside the game. So SciPlay, they recently went to 100% of that segment from like 81%. So they acquired the minority interest. That only happened just recently. That basically gives them the ability to utilise the cash that's sitting within that segment, but also make 100% the decision within that business. So what they can do effectively, when I talk about that D&D business spending, without the ability to have a digital portal as an outlet for your games, you previously would have had to basically design and develop a machine, say Frankenstein's, which is a recent game that they've made, and just throw it out onto the market as a box. If it failed, you've then spent all that money on the design, the manufacture of that machine, and then you've ended up with a loss-making machine. Going forward, owning 100% of SciPlay, you can then test out the games that you're going to develop as a land-based game in that format and see what resonates with the users. And within a matter of days, if not weeks, you can then test, is that certain special feature resonating with the customers? Is it creating longer term gameplay? And then you can tweak things that aren't working or are working to improve the performance of that game and see in real time how it's performing before you have to outlay the capital developing a hard box or a land-based product. So it's a really unique feature, and it's something that Aristocrat kind of develops through their own portfolio of assets that Jamie's kind of brought to the table, and we're seeing it develop further with Light & Wonder, and iGaming adds another lever to that piece as well.
Yeah, so talk me through the contrast between iGaming, their third business unit, and the SciPlay business unit.
Yeah, it can get a bit confusing because you're talking about one digital, one digital as well, but one's real money gaming.
Yeah.
So iGaming is basically effectively, instead of it being, playing for tokens and exchanging them in for something else, you're actually outlaying real money. So if you look at the success, and this is probably a forgotten story now, but PointsBet, all the rage was how quickly the US was going to penetrate online sports betting. So online sports betting went from, legal in 0 states to, originally in New Jersey, and then it penetrated the rest of the US. iGaming is following a similar model. So at the moment, there's 38 states that are legalised for iGaming, for online sports betting in the US, and there's only 7 or 8 states that are legalised for iGaming. And the reason why it gets legalised in these states is they're short on revenue, basically. Like a lot of these states are struggling post-COVID. They want ways to generate tax revenues, and iGaming is a perfect way to do it. I think I read a stat that the revenue generated from playing iGaming, the GGR on that, is 3 times more effective than the revenue generated from online sports betting. So you are starting to see a lot of the states that were the early adopters for online sports betting, go to that iGaming model. So Light & Wonder's position in the space, they are the early leader. They are the #1 market participant. They've got about 13% share of the iGaming market. And for want of a better analogy, it's probably like a Netflix type of model where they've got the platform similar to Netflix. They've got their own content similar to Netflix, how they create their own movies. And similar to Netflix, if they want their movie to be watched the most or their game played the most, they give it the highest ratings and put it up to the top of the list. But they just collect a cut of revenue for people that play on those games and white label that product. Basically.
We'll be back with more Talkie Book after this short break. We're here with Anthony Kavanagh from Chester Asset Management, and this is Talkie Book. Anthony, we're talking a bit about the R&D spend and the SciPlay business unit for Light & Wonder. Yep. And just what role that plays in them, I guess, battle testing games. Also interested to note the view that Australia is a bit of a fertile ground to trial games before taking them overseas. What role does the Australian market have for Light & Wonder before moving those games potentially to the bigger US market?
You're basically stealing my thunder here, mate. And apologies for the first half. Apparently we're going longer than most people go on the show. But
that's all very good stuff. We're happy with it.
So if you think about Australia, and particularly the New South Wales and the Queensland market, what the game developers often do, and it was probably more of a feature before you had that digital outlet that I described earlier, but it's still a key feature of the market, is that you trial, if you're Aristocrat, you used to trial the games in New South Wales and Queensland, and the games that were most successful, you then take out to the US market, and you'd already have a pretty good feel for how successful they might be or what's been working with those games from how they've gone in the Australian market. So all the analysts used to tell me when I used to cover Aristocrat, early days, was like, you need to be on top of the New South Wales and Queensland ship share to understand the dynamics of what that's going to translate to for the North American market. So when Aristocrat first started cracking the market, they went from a #4 to #1 player. The early indications that you saw were in the New South Wales market, where you started to see Lightning Link start to pick up material market share. So it's really important in terms of the long-term future in the North American market. And we've seen Aristocrat hold 70% market share literally for the 10 years up to 2020. I might have my numbers off a bit, but so up to 2020, Aristocrat was sitting at about 70% market share. And at the time, this is when Light & Wonder kind of re-geared the balance sheet and changed, I guess, some of the elements of their strategy, and even changed their name from Cygames to Light & Wonder. They were sitting at like single digits market share. So if you remember what we were talking about earlier, when they started investing in R&D and bringing on all those content creators, they then started to develop better and better games, and their go-to-market strategy started to improve with a bit of confidence from the guys that they brought across from Aristocrat. Something like 75 management employees that came from Aristocrat and now at Light & Wonder's exec team. So if you think about what that means, and you can see the early stats in New South Wales and Queensland, we saw in 2020 that Light & Wonder had single digits and Aristocrat had 70%. you go over the next 3 years and almost consistently every 3 to 6 months, you'd start to see Light & Wonder start to increase in that market share. And so over that period in 2021, I think they probably averaged about, 10 to 15% market share in the Australian market, and Aristocrat had gone from 70 to 65. In 2022, it went from kind of 15 to 20%. 2023 now, you're starting to see it tick up to closer towards 30% market share from single digits 3 years ago. So we're starting to see that as a really strong early indication of what might be achievable in the US market as some of these games start to penetrate. And a lot of that has come from success from a product called Dragon Train. So Dragon Train is basically like, it's almost a rip-off of Dragon Link that Aristocrat had. They took the second in charge who developed Dragon Link at Aristocrat, brought her across to Light & Wonder. And this game hasn't yet launched in the US, but we've started to see Light & Wonder go from 0 out of 25 games in the top performing games, this is in the New South Wales market, to now holding the top 4 spots in the New South Wales market. And those 4 machines are all Dragon Train machines, just different variations of that game. So we're looking at that as kind of an early indication as to what might actually success look like for Light & Wonder in the North American market as that product gets commercialised. And we're expecting that probably the next couple of months.
And you've sort of answered my question here already, but just to dig a little bit deeper on it, we've spoken about Aristocrat Leisure a bit. They're clearly a dominant market leader, and
Yep.
market leaders, particularly in technology, have been pretty hard to displace. What gives you some confidence that Light & Wonder are going to be able to do that, or at least grab enough market share that is going to make the investment worthwhile for you?
For starters, the market is bigger than just Aristocrat and Light & Wonder. So each of those in the US market has about 25%, let's say, for round numbers. And IGT has a 30% market share, and there's Konami, and there's Every, and there's a whole bunch of other smaller players that you can also chip market share away from.
Yeah.
So both Aristocrat and Light & Wonder can exist and acquire market share at the same time. So I'm not to say that Aristocrat's going to die a slow death or anything like that. But some of those other companies are a bit distracted. So IGT is going through a strategic review at the moment. I'm not quite sure where that's at, but I'm not sure if they're spending the same amount on D&D as what Light & Wonder are. Some of the smaller players, Every and Konami, they've got a lot smaller R&D budgets as a function of their revenue not being quite as large as Light & Wonder. So over a long period of time, maybe Light & Wonder continues to chip away market share from them. But if you look at the Australian market, Aristocrat, I said, went from 70 down to around 35, 40% at the last read. Can you read a huge amount into that? Maybe. But Light & Wonder, Aristocrat probably more focused on some US games at the moment. So their crack game at the moment is a game called NFL. Obviously, that's not necessarily an Australian type of game. So they're seeing success from that game in the US market, and I've heard mixed reviews about that machine. But they're focused on that in the North American market, and that's probably going to see them still continue to perform well despite them losing ship share in Australia.
Well, Anthony, as always, there's not many that can tell a narrative and articulate an investment thesis better than you. So thanks very much for making a Talk Your Book debut.
We haven't even started talking about valuation. So before we finish, mate, I've got to mention the fact that our valuation for Light & Wonder is about $170 a share, and our valuation for Aristocrat, just for completeness, is $43 a share. So we see still extreme upside in Light & Wonder, at least 30% upside from where we are today. Maybe not necessarily this result coming up in I think it's the 27th of February, US, or 28th of Feb. There's a few question marks around the selling in Australia because from my understanding is that there was inventory stockouts in December, so maybe the result won't be as good in this quarter as what we would have hoped. But going into 2024, we still see them delivering $1.3 billion in EBITDA, and the market's at about 1.2. And I should have said this earlier, but they've got a target in 2025 of $1.4 billion US EBITDA. And we think that's achievable. I think the market's still somewhat doubting that. Consensus for sell side is around 1.3. But if you think about what Aristocrat's currently trading on our numbers, it's 12.5 times EBITDA. We've got Light & Wonder on 8.5 times EBITDA. And this is one of the most obvious sell side brokes I've ever heard, and I've heard it from a few of the sell side. If you put Light & Wonder on the same multiple that Aristocrat is on 1 year forward, you can quite easily see a valuation over $200 a share Australian. We're, as we record this today, about $135. So there is still a fair bit of momentum with Light & Wonder as we see it today.
You'll have a job at Barrenjoey waiting for you if the funds management doesn't work out.
See how we go, mate. And if ever you want to present, I'm more than happy to be the host when you want to present your stock for us, Chris.
I'd much prefer to have you answering the questions. That's brilliant. Thanks, mate.
Thanks, mate.
Awesome.
Easy.